Tesla reported third quarter earnings after the market closed on Wednesday, October 19. So I made a video here just doing a quick review of the financial figures revealed in those results. So let's get right into it. The major theme here is that Tesla's raising prices to offset inflation. Tesla hasn't been immune to the rising costs that's plaguing economies worldwide. Still, overall revenue increased by 55% to 21.45 billion in Q3, which ended September 30th. Automotive gross profit was down 258 basis points to 27.9%. And here's where inflation is hurting Tesla, rising costs. But it's not only inflation, it's also the increase in competition. Several automakers are now developing electric vehicles, and so the competition for the parts that go into electric vehicles, the components that go into them, there's now more competition for them, and so that's raising prices for the components. That's something to keep an eye out for investors going forward. Earnings per share came in at $1.05. This was up 69% from the same quarter last year. And when we look at this top and bottom line, revenue growth of 55%, earnings per share growth of 69%, just remarkable growth for Tesla on the top and bottom line here. Free cash flow of 3.3 billion was up 148% from last year. This is a major change in the Tesla story, investing in Tesla stock, because just a few years ago, I would say 2019, 2018, cash flow was a major concern for the company. It seemed to be perpetually in need for cash, short on cash. That's not been a problem in the last year and a half or so. They're generating healthy free cash flow. They've got a healthy amount, over 10 billion of cash on the balance sheet. So cash flow is not a problem anymore for Tesla. And in fact, some investors are calling for Tesla to buy back some of its stock because the stock price is down substantially off its highs and the company is generating so much cash flow. It has so much cash on the balance sheet. Investors are saying, hey, why not buy back some of your shares? They're cheaper than they've been in a long time, so buy back some stock. So that's something to keep in mind. Maybe in the next few quarters, Tesla might announce a buyback of its stock. So I mentioned earlier that inflation is hurting Tesla's gross profit margins, and so it's been increasing the average selling price on its cars to offset some inflationary pressure, although it wasn't enough to stem the decline in gross profit margins. I will note here that Tesla CEO Elon Musk has been saying that they're raising prices right now to offset inflation, but he will aim to bring prices back down if costs come down also. So he doesn't want to permanently keep these prices high. He potentially wants to lower prices to stoke consumer demand, which I don't know. I don't know if that would be a prudent decision. It remains to be seen, because Elon Musk often brags about how customer demand is so strong that people are waiting 3 months, 6 months, 9 months, even up to a year to receive their Tesla cars. So if you've got customer demand that's so strong, people are waiting. I don't know if it's such a great idea to lower prices, but if that customer demand does start to decrease because of higher prices, then it may be prudent for Tesla to say, okay, let's bring prices back down here. Moving on to total vehicle deliveries of 343,830. That was up 42% from the third quarter last year. I just mentioned how customer demand is so strong for Tesla, and so much of the story, much of the conversation with Tesla stock investors has been with supply, on the supply side, because customer orders are backed up for 6 months or even longer in some cases. It's just a matter of how quickly can Tesla ramp up supply to meet that customer demand. How quickly and efficiently can they do it? Because of course they can ramp up supply, but at a really high cost. But can they ramp up supply efficiently while keeping prices level and meet that customer demand? So that's been the story for Tesla over the last few years is how quickly can they ramp up supply. And they have been really good at ramping up supply, adding new factories, increasing capacity at existing factories. So they've been successful in this. Interestingly, Tesla said that the semi deliveries are scheduled to begin in December of 2022. And so now this is a new vehicle, a new truck that will come out that will add to the customer demand and add to the production pressure. And so it remains to be seen how quickly they can ramp up production of this new type of car, this new type of vehicle, and what the customer response will be. But nevertheless, Tesla stock investors are excited about this new product that will be launching in December. So for a long time, and I'll close with this, for a long time Tesla has told investors that their goal is to increase deliveries by 50% every year, and they reiterated this in their press release with the earnings report, and they went out of their way to highlight that this is dependent primarily on supply, that increasing deliveries by 50% annually, and they named several factors, but they were all on the supply side. And this just goes again to highlight the story of customer demand being so strong that they're not concerned about customer demand. They feel comfortable that customer demand will be there. All they need to do is increase supply. So that's interesting. I mean, that's not going to be the case forever, where customer demand is going to be there forever. Competitors are rising up. Nearly all major car companies are now offering electric vehicles, but still customer demand for Tesla's cars are high. That's interesting, and that's a story to keep an eye out for. Overall, this was an excellent earnings report for the company. You know, executionally, they're doing great. Deliveries are increasing, revenues increasing, earnings per share are increasing. Only a minimal impact from the inflationary pressure. All companies are feeling it, so it's not like Tesla was the only one to experience declining gross profit margin because of inflation. So that they weren't a standout here on the downside. All that being said, if you've watched my video, you know my recommendation for Tesla stock is that it's not a buy right now. The stock is too expensive compared to the risks and competition rising. And this quarter's results doesn't change my recommendation. I would still say the stock is not a buy just yet. Price is too expensive for now. I would want to see a little bit more of a drawdown of the price, or I would like to see earnings per share continue to rise with the stock price staying the same. That way you're getting more earnings for your dollar than you are getting right now. Otherwise, excellent quarter for Tesla. Hopefully they keep up this great performance. Thanks for watching, and I'll see you next time for the next earnings update. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment, so I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 354% as of September 21, 2022, and measured against the S&P 500 returns of 112% as of September 21, 2022.